What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Taiwan Semiconductor stock, ticker symbol TSM, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. Well, TSM stock on Friday finished the day down $2.34 a share, 1.81%. It is essentially flat after hours, or at least was. Of course, this is being recorded on a Sunday now. You know, it is up about 6 cents in the after hours. However, listen, I mean, as always, you guys will hear me say this all the time. Hope to see you subscribe to the channel if you continue to watch, get value out of this. I appreciate you guys. See that? Volume is so incredibly low. And if any of you have traded after hours on almost any stock, but especially the stocks that don't have like an Apple-sized market cap, it's actually quite bizarre because you can put an order out and it moves the market. You can actually move individual stocks more, so not the entire market, individual stocks with not that much size, just by placing orders that aren't even that big. It's bizarre. It's really an odd thing to see. So we have to take that after hours movement with a grain of salt, absolutely, whether it's in your favor or going against you. But listen, I mean, given option A and option B, yeah, as a bull, I'd rather have it up 6 cents than down. But let's take a look at TSM here. So let's start on the 1 minute chart. You know, this video is really geared toward Tuesday from a day-to-day perspective. I am a scalper though. It's what I do every day. So let's start just briefly on the 1 minute chart and take a look at some potential intraday opportunity that may have presented itself on Friday that we might be able to look to replicate on Tuesday to try to generate some revenue intraday, via scalping or intraday swing trading or whatever floats your boat, around a core position. So being that TSM itself wasn't necessarily in play on Friday, what I mean by that is a fresh news catalyst, something that's contributing to pretty large elevated relative volume, pushing average true range to quite a degree. Okay, 1.5 to 2 times average true range, usually 2 to 3 times RVOL. We didn't necessarily see that on TSM on Friday, so now we're down to setups that, which is a much smaller list, within our playbook that has edge, even in stocks that are not necessarily in play. So that might be a setup I developed that, the primary setup that I teach in the Roensch Capital Gold server called the Repeat Offender. If you guys, I send out those alerts every single day. If you guys want to take a look at that, it's the first link in the pinned comment. I hope to see you join. But if we take a look at TSM here from Friday, there were no Repeat Offender setups, but if we zoom in, we could look at like a breathe and go. Okay, like the only one that really catches my eye here, which, by the way, the breathe and go is another, I don't claim to be the only one who trades this style of setup, but this is a setup in particular that I, again, developed. You see a pull away here, and then a retest and a pull away. The volume ratios, though, they're not lining up. We're heading into volume weighted average price. I don't like to take long breathe and goes below volume weighted average price. So, listen, on TSM, if it's in play, happens to be in play on Tuesday, I'll be looking at my entire playbook, but really, come Tuesday, I'll be watching this thing for repeat offenders because 99% of the market isn't in play on most days. So let's move on from the intraday mentality and now start looking at more of a day-to-day mentality, starting with volume on the 5 minute chart. You guys know we're always checking this. I want to see if there's any very obvious changes in volume that correlates with big moves in stock price. Okay, like for example, if we saw this big tank off and pump, and this big tank off had half or a third of the volume as this pump, what would that tell us? We end up almost net neutral by the end of it, but the sentiment there isn't net neutral. In that scenario, a huge sample size of the market would be telling us, hey, the bigger sample size agrees with the upside move when compared to the downside move. But if we look at the volume here, you can see that we didn't, we saw some of this spillover off the open, elevated volume, and then volume kind of normalized into that green move. It would just be a force to say that we could pull anything definitive out of the 5 minute here, but we always need to check it. So let's move on now and start getting really contextual with day-to-day self-fulfilling prophecy levels to watch, at least that I'm going to be paying very close attention to, and the rest of the world will also be paying a close attention to come Tuesday. That's going to be this white line, the 50 period, and that gray line, the 200 period moving average, starting on the 30-minute chart. Remember, always looking at multiple time frames. Trading off of one time frame, I think, is not only dangerous, but it's kind of lazy. So looking here, you can see that that 50 period is really immediately relevant. It's about a 1.25% away. If I'm a bull looking at the TSM 30-minute chart come Tuesday, really I want to see an upside break and hold of that 50 period as support so we can start making our way up toward 130 in that 200 period. And if I'm a bear, if we, obviously bears don't really want to see an upside test of either of these. They would rather just see a pull away downside. But if we do see an upside test out to the 50-day, bears, you're going to want to see that hold as resistance and fade off of it with it continuing downside. Okay, let's move on now to the 4-hour chart. This one is incredibly in play right now. You can see here that we are right up against that 50 period. Here's what we're looking for. Really simple here on the 4-hour. See how this 50 period is moving upside? Bulls, you're going to want to see that continue to happen, but also we got to get back above that 50 period. Get back above it, retest it, if we do, hold it as hard support, and bounce up through 130 really is the ideal scenario here. But even if we just do a little bit of that tomorrow, or more so Tuesday, and we reclaim that as support and continue upside, that's fine. Bears, what you really want to see is that 50 period start to flatten out, act as resistance, and the stock to fade hard off of that level. Now let's move on to the most important chart of all, which is the daily. This is where things get the most contextual. Every fund, every algorithm, every institution, every retail investor is looking here at the daily. Now you can see here that that 50-day moving average, the 200-day moving average, they're not immediately relevant. They're down there quite a ways. So we have to look for the obvious story, right? This is all, charts are a self-fulfilling prophecy in the short term. Of course, in the mid and long term, fundamentals take over, but in the short term, this is all psychology. So where's the obvious story? Always ask yourself that. To me, 125 is the obvious story. If I'm a bull, I do not want to give up 125 in the short term. Okay, just hold 125, start making our way up toward 130, ideally through 130, so we can start making our way up to that 135 area. And if I'm a bear, it's even more obvious. Break downside down through 125 and stay there. Ideally is the bearish perspective here on the daily chart. Very simple. When it's obvious, when it's simple, do not overcomplicate it. You want to be looking at what everyone else is looking at, even with not that deep of an understanding of TA. Now, let's finish up here by taking a look at how are the options traders positioning themselves, or how did they position themselves on Friday as we head into this coming Tuesday. So we have 116,000 contracts traded. That's the total. Decent sample size. You can't expect 10 million on TSM here, but 72,000 of those were calls. 44,000 of those were puts, so we are seeing a call side bias here in TSM on Friday, heading into Tuesday. The short-term speculators, that's 0 to 20 out of the money, cheapy, gambly style contracts in the very short term, typically on average, 25,000 calls, just under 19,000 puts, so we are seeing a short-term bullish bias as well. And then really interesting, if you go down the list, so you have out of the money and then at the money and in the money. On average, short-term, mid-term, and longer-term sentiment, guys, on all 5 of these, we are leaning to the bullish side, okay? As well as obviously the overall call per ratio leaning bullish. So just understand that, bears, understand that, bulls, understand that. This is just one factor of many, okay? And take that with a grain of salt because, of course, your risk still needs to absolutely be managed, and the options traders can be, and oftentimes are, wrong. So keep that in mind. Listen, if you got value out of that video, again, please subscribe to the channel. I greatly appreciate it. It helps out tremendously. And I'll see you in the next one.